Hello everybody, this is Mark here at TSLA, and once again Tesla closed in the red, just slightly this time. It closed at $264.35, which was a 93-cent drop, translated to percentage terms as a 0.35% drop in the price today. Now, before we dive into the charts, let's look at the major news item for today, and it's not Tesla related exactly, it's more of a macro thing, and of course that's going to be the Federal Reserve raising the rates by 0.25%. And this is very much expected. So if you think that the rate hike wasn't expected and the market dropped because of it, not necessarily the case. I would say the vast majority of analysts that are tracked by the major news organizations have determined that this would have been a rate hike guaranteed. About maybe 1 out of like 25 thought it wouldn't be. So the new range of the federal funds rate is now 5.25 to 5.5%, and that is the highest rate in 22 years, as you can see from this article. As far as the next meeting goes and the possibility of another rate hike this year, the current betting odds are that it is slightly likely not to be raised further for the rest of this cycle. And in the last little note here, one of the key items says, Chair Jerome Powell said the central bank will make data-driven decisions on a meeting-by-meeting basis. And what does that mean? Well, since the next meeting is 2 months away, they're going to have at least 2 sets of non-farm payrolls, along with any other employment data, something like the ADP on private payrolls. And of course, you're going to have a slew of inflation rates for, you're going to have PCE this week, and you're going to have, of course, 2 more CPIs and another PCE. So there's going to be plenty of inflation data for Jerome Powell and his governors to figure out if they want to do another rate hike. Of course, well, as far as the market goes, the market's going to price in that rate hike depending on how they view the inflation story going. So I mentioned in another video that as we get into the fall, the comps year over year might be a little bit more difficult to have sound beats as energy prices might be going up a little bit as we go into the end of summer. You're seeing cuts from the OPEC nations. So it's going to be really interesting how we absorb the higher costs with energy, slightly higher costs in food. Even though food inflation is much lower than it was last year, things like the grain deal being terminated by Russia, which is the ability for the Ukraine to export their grain over any waterway that Russia happens to be on. They won't necessarily attack those types of ships. So that really skyrocketed the grain prices as Ukraine is a breadbasket, kind of like our Midwest, where they supply other countries with large majorities of their flour and their wheat. So there's another little food item as far as inflation goes. Like rice prices are increasing. India is really limiting their rice exports as well to conserve the rice for themselves. So there are some issues that as we go into the next couple of months, commodity prices being a little bit higher could affect our ability to beat year over year soundly when it comes to inflation. But I did mention also again in another video that headline might go up in regards to headline inflation. But what they're really caring about is how is core PCE and CPI going to evolve as housing pricing or shelter pricing comes in, and as energy goes up. Like, is there a way for one to beat the other? Housing is a really huge weight. We know that used cars and cars themselves have really dropped in price. So you're going to see, I think, continued weakness when it comes to that. And in regards to Tesla, we as investors are going to tackle this idea that how do we drive demand when rates are very, very high? And are we lowering prices? Are we bringing in our margin again? And that's going to be the story when it comes to the price action for Tesla. Now, speaking of price action, we're trying to understand the weakness of the Tesla stock. Now we know that there was an earnings report that wasn't taken very well due to the non-clarity of those margins. But let's take a look at the Max Payne site and look at the Tesla expiration for this weekend, for this Friday. And now you're seeing some of the reasoning. You might understand why the pricing is really being suppressed under 270. You're seeing at the highest spike, the most open interest of almost $55,270 puts. With the current stock price being $264-ish, I don't remember the exact number, but if that is the case, that's in the money. Meaning that if you own a put or you sell a put, a strike price, the current underlying stock price, if it's under 270, well, you're unfortunately not going to be making any money on that very much. So if you're a seller of these puts, okay, that's what I was thinking too. Before I continue, let's look at the volume chart. So the volume chart of the number of the volume of orders being placed. Now let's look at the 270 strike for the puts. Here's 270, 9,000. It's not lining up in regards to the level of open interest at the 270, okay, compared to the volume of the 270, meaning that there's not many orders being placed. Now, what can this mean? Number one, there's a lot of, let's address the put floors. The put floor is going to be somewhere around $260, $265 as well. So ideally, the market would want to close the price somewhere at the 266, 265, 264 price range, kind of where it's currently at. And that's kind of, these options are really affecting the flexibility of our stock price here. It's really pinning it in this area. It does not want to get to 270. But let's look at the weird dichotomy of the number of orders of 270 strike calls is 100, almost 109, 108,000. 108,000, I'm blind. Okay, so 108,000. The volume, the open interest on $270 puts is almost 54,000. Now you're like, okay, so why is the volume so low on 270 puts, and there's so much open interest? Now the only thing I can only assume is one of two things, is that someone's lowballing this 270 strike put, meaning they're just placing orders at a couple cents, and they just are kind of jack up the open interest in that respect, and maybe they're trying to skew some type of model that someone's running. The other thing is that these are actually people trying to sell. Someone is trying to sell a lot of $270 puts. Now we know that the price of the stock is currently under 270. Okay, so that means that if they're selling 270 puts, those are in the money. And why would anyone do that other than the fact that they intend to close Tesla at $270 and like 5 cents? Meaning that they want to sell all these puts and then make pure profit on them by just pushing up Tesla. What do they need? $6 a share? Like 2.5% over the course of 2 days. If Tesla moves 2.5% over the course of 2 days, and all of these puts eventually get sold by the close of Friday, then they're going to make pure profit, right? They're keeping it. Okay, so look, you have to understand. I guess we have to understand the two situations. If they want the price of the stock to be over 270, if they're selling these puts, but unfortunately there's a big call wall of 108,000 calls. What does this mean? I mean, the thing about it, we don't know who owns these options. Maybe this is a market making, this is a hedge fund, this is a big bank who owns these options, and they're wanting to go both ways. Where number one, they're going to get the stock over 270, so that all their calls are in the money, and also they're going to sell a call on puts for 270 and have it go over 270 and make pure profit on all the puts, because they're controlling so much of this action. There's a lot of pressure to keep the stock from to sit around 265. So a very slight move to 270 is very, very doable. Like this is kind of the 260 to 265. The price of the stock might jump around here. So if you are let's say we have a GDP number tomorrow coming out, along with jobless claims and stuff like that. So we have some news coming out in the morning. But let's say all this news is taking very well, and the stocks and the indices and Tesla go up in the morning. What happens if Tesla once again gets to like 267 and it gets sold off again. We're not going to be surprised, right? Because they're trying to pin it as can keep it in this area and not have it get to 270. But also at the same time, there's a lot of interest at 270 because someone's controlling these options. So it's going to be very interesting to see how this plays out. I'm very interested as well because I want Tesla to go up. I'm tired of down. I do not want down. I do not want sideways anymore. I don't want consolidation for the next couple weeks. Let's look at the charts again. So first things first, let's clear up these indicators. Okay, so we drew these indicators over the last couple of days. We left it to see how the price would move. It's not exactly following them, so I don't think they're very relevant anymore. So we'll go ahead and remove all our drawings. Let's go into, this is the hourly time frame. Let's go to the daily, just for us to get kind of a expanded look of how Tesla's looking. It's not making any obvious patterns other than the fact that, you could be saying that it's developing a very oddly angled head and shoulders. We can draw something that looks like that, right? And it could be developing that. You would need a neckline that would be very awkward, something like that. But you're seeing how it's possible that this could be bearish. What levels do we want to look for? Number one, on the lower side, 235 would be a gap fill. We do not want it to get there. We also know that if Tesla's, it's possible that it won't fill the gap, just likes to dip into it. That would be 240, which would be devastating. What could get you to 240? Inflation this week on Friday. If inflation is very, very bad, don't be surprised if Tesla drops like, a butt ton. Like what could it drop? $20 something. That would be 10%. So likely not. But it could drop severely over the course of some days, depending on how the news comes out. Hopefully it doesn't drop at all. Right? So let's look at the indicators real quick to see how our indicators are doing on the daily. We're still kind of trending below the moving average for RSI, but the stochastic RSI looks like it's bottoming and it's kind of curling, crossing over. What does that look like in other situations? Okay, so when it crosses over, you have something like this, where this was the bottom. We can kind of line it up. It was here. That was the bottom. Whereas another scenario where it crossed over, it would be somewhere around here, like right here. How about somewhere else where it crosses? How about here? Oh, sorry about that. How about another place where it crosses? We're gonna keep trying to find places in this daily time frame where it crosses over right here. This wasn't too decisive, and it can show you it might not really mean too much. The cross was like here, and it kind of went up a little bit after that, but not really convincingly. And of course, on the bottom here's the bottom in December, end of last year. So we know that our stochastic is, there's another one right here. Our stochastic is curling over. It could be a sign of a bottoming process. But the MACD is not really showing that. It shows that there could be some more room to the downside. It is pretty oversold, but at the same time, Tesla can stay oversold for quite a long time. We can see that right here from October of last year or September of last year until January. So you can go a whole quarter where things are looking very bad for a very long time. Something like that. Not fun. That was 105 days of selling, or essentially 67.6%. Okay. Yeah, we don't want that anymore. But so that's the daily. Let's look at the monthly to see how our monthly is looking out. It looks like the RSI crossed over on the monthly. That could mean more upside. It shows that over the course of the last couple of years, we've actually been relatively oversold. And that's probably because we've been in a big downtrend since October 2021. We've been kind of selling the whole time, really. And you're kind of seeing that how on the monthly, this is kind of bullish, we're about to cross over on the MACD, and we still have more room upwards on our stochastic RSI, and we still have more room on the regular RSI. So on a bigger time frame, on a month, let's just, for giggles, we can just take a look at the weekly. The weekly looks like it's toppy, and The RSI could be trying to struggle to stay above the average. Possible MACD curling over on the weekly. Let's zoom in on the minute and take a look at the price action on the day. And so the day started here on the 26th, right here on this gap down, and it came back, it recovered decently, and it literally went sideways the entire day. Now, we talked about how the S&P 500, how it kind of consolidates during the first couple hours of trading on a FOMC meeting day or decision day on interest rates, and then does like some explosive moves to the up or downside over and over again. But we really didn't get that violent with Tesla. And the reason for that is kind of what we might have been talking about. The market's doing everything they can to really pin the price to around 265, either to keep it at that so it doesn't get near the 270 call because the people that own the 270 puts want it paid out, or the people who are selling these puts are wanting to keep Tesla in striking range of 270 because the 270 move, we talked about that from, I'll start from the actual close, not the aftermarket. Just slightly over 270 would be very, very reasonable. $5.70 something cents or 2.18% will get you just above 270 if they want that move. It kind of puts you at a pretty good area too. The tops of these ranges is kind of shows that you might not necessarily be that bullish because you're not making a new high. You're just doing an equal high to these peaks here, and you're not coming over to 73, which would be pretty bullish because we haven't made a new low. Perhaps that will, like I mentioned, that perhaps was a double bottom, and this could be still higher lows for now. That's what we're hoping for. Let's take a look at the S&P 500 to kind of look at the price action for the day. Now, we had a gap down and it stayed low the whole entire time. We typically said it'll do like maybe a 0.3% move, and that was kind of right in the sense that it did about a 0.24 kind of pump, and after a 0.24 dump, then dumped again. And then, so here is the release of the notes here at 2 o'clock. It went down a little bit and then just kind of consolidated again. It didn't really do a violent move up or down, not at all. And as the press conference of today's FOMC meeting went on, it went up pretty quickly, 0.66%. And of course, we said that first move probably is fake. It went on to do what a lot of people thought was a very much a bull flag. You know, it had the pole. It was kind of doing this almost banner pennant triangle-like ascending pattern, and it broke down from that pattern very rapidly, and that was a drop from the end of that pattern about 0.5%. It then kind of curled up into what other people thought would then be a bear flag, but then it reversed itself, and then it sold off again, and it got bought back into the close, and that really just showed that they wanted to close SPY, or S&P 500, very, very slightly green, 0.02% positive. I think the QQQs did not close in the green, but they got bought up after hours after Meta posted decent results. The Dow Jones is selling after hours, but it was green again today, about 0.26%. So you can see we've been talking about the Dow. The Dow is very, very strong. It is posting gain after gain after gain. The Dow, if you're familiar with the Dow, classic Dow theory, if you look at the transports, Dow Transport Index is very, very strong. Transports are known to lead, meaning that the transport companies, if they're doing okay and being bought up, it means that people feel pretty positively about the economy. Let's look at, just to get another macro look at the market, let's look at the SPY, where this represents the S&P 500 as an ETF. And you can kind of see there's nothing really necessarily bearish about this other than, you know, on the daily, it looks pretty overbought. On the RSI, looks like there's a little bit more room on stochastic to go up a little further, even to this 462, which would equal a high from April of last year. On the MACD, looking pretty could look pretty toppy, but there is still room. It could be a little higher. It can go a little higher. Let's look on bigger time frames so we can have a zoomed out perspective. On the week, it looks pretty bullish. Look a little toppy on the RSIs. On the monthly is one of the most bullish things you can see on a lot of tickers. We've been selling off for a very, very long time. We keep thinking that, the stocks are very, very bullish, but we've been selling for like a year and a half for some tickers, and we're not even equaled high yet to the highs from December 21. But if you look at our indicators on the monthly for the S&P 500, it looks pretty good. We actually have a crossing over on the MACD, and usually when that happens, good things happen. So you might say to yourself, like, okay, look, I don't get it. Why is the market going up? It's going up too much. Well, is it though? I mean, let's just look at a very recent event in COVID where this rally was 120% in a matter of 2 years. It is just basically straight up. That's just like a diagonal line going up. What's our current rally from our October lows? It's approximately 31%. It's nothing like it's nothing like COVID's rally at all. And I understand we don't have the same liquidity, but what we do have is a real good story when it comes to the AI revolution. So that is the market on a kind of bigger time frame standpoint. So what do we expect from Tesla tomorrow? Well, I think what we said would kind of ring true, where it is going to be pinned in this area due to the number of options. Now, we can, as I explained in another video, we can kind of watch those Max Payne, the Max Payne Tesla page, and kind of understand how the interest in those calls and puts are developing. Is all the open interest on the 270 puts real? Is that going to just drop and disappear tomorrow? It's possible. You can just cancel those orders and they'll go away. And what about the calls? So if the calls start building at 270 even more so, it's going to be really difficult for Tesla to get over that point. Like, where could you see Tesla? What levels? If there's bullishness in the market, if people like what Google's doing, if people like what Meta is doing, and Lam Research was a fab for semiconductors, did pretty decent. Microsoft, as we know, is still kind of low, but Microsoft isn't selling off violently like Tesla or Netflix did. So I think Microsoft will find buyers. But how about a move to 269 by the end of the week? 1.9% or so. It's very possible. So I would say it could look, and this drawing is the Head and Shoulders drawing we did earlier. It could look like something like that, and it just doesn't want to go. And as Friday comes, dips down in the pre-market for the PC report, and might come back flat again. If inflation is really, really bad, how can that go? So I would say this is our best case scenario for this week. We're very, very pressed we're being suppressed by the options plays that Tesla has. A lot of retail people that play options, and unfortunately that really hampers moves sometimes. But where can we go, to if things go really, really bad for inflation and GDP? Well, I think we go in the morning of Thursday. If GDP is okay, we can do that and stay that way. And as Friday comes, you just kind of sell off to the neckline of the so-called quote-unquote possible Head and Shoulders, which would take you down to around just above 250, and they wouldn't want to pay out the 250s. The other big interest was 260 on the puts. So 260 would look something like that. And it's possible, by the end of that week, maybe you stop something like that. You stop there on that 260 or right below it. Like I said, I don't really have a story. I don't know how to get up higher unless inflation is really, really good. Let's say inflation's core PCE inflation is very, very good. I think you can get a move that would be pretty substantial. Something like over the course of tomorrow and Friday total, maybe around 3%. 3% would look like what? 272, something like that. That would keep the market from paying out the 272.50s. It would be something like that. Maybe. Who knows? But we do know is that, we're still pretty range bound. And we talked about this concept. A long time ago, many weeks ago, when we finished the move from spring and we went up 80%. Let's go back and take a look again at the consolidations that we suffered through. And I just, as a friendly reminder, if you haven't watched my other videos, let's just talk about these ranges and the severity of the ranges, so we can understand how much we can move in our current consolidation and it not be out of the ordinary for Tesla's ranging. So I'm going to draw a box around that consolidation and around the one during spring. And we can just kind of measure again so we can refresh our memories how that really went. So as far as the duration went, as far as me dragging over left and right, that was a trading range of 76 days. And the range percentage-wise up and down was 23%. And that was before Elon made the purchase for Twitter. So here is, I drew another rectangle. Sorry about that. Here is the measurement tool. So for the spring consolidation, it was very, very long. It was something like 90 days. And the range was 42%. 42%. So it was pretty substantial. Could that happen again? It's possible. Let's delete some of these lines, and so we can see it better. Let's just assume that we're in a range. If we measure from the gap to the peak right before the earnings report came out, that was 24%, and the current duration of our range is only 48 days. The other ranges were what? Like 2 months, essentially, 2 to 3 months. Let's say it's going to be 2 months. And we'd be stuck in this range at least. You could see us coming out and not breaking out of this range even right into the second week of August. Where is the bottom of this range? The bottom of the range is kind of at the 240. And so even if it went to 240, let's say it went to 241, 242, it would still be bullish because it didn't make a new low. If you get into the gap, I would say it's pretty bullish, only if you find support on 234 and bounce off of it. But unfortunately, you'd have to suffer a pretty severe drop of $30 a share if you see the 230s by the middle of August. That would be brutal. So yeah, 24%, which is the current move, is really not that outrageous. This is a 41% range. This was what was it again? 24% range. So this range could just be this range, and we can just be going through it right now. And we talked about it. We could be developing some type of topping pattern. Unfortunately, if you see the 250, I would probably hedge pretty decently down to the 230s area. Unfortunately, because if it hits this neckline, that is very not good. That would be very, very bearish and would complete a head and shoulders pattern, which I would not be happy with at all. So just know that what's happening with Tesla's price action is kind of known. I mean, this is kind of how Tesla deals with it. And if you want to look again at how Tesla kind of approaches its price action, it can get very, very violent, where look at the all-time high in November 21. It sells off considerably. Just remember, that was a 22% sell-off. And then it went up probably 20%. Right? Yeah, they went 21.5%, and then it just sold off again. Another, over the course of, this was only course of about a month, another 25.5%. And after that, it went up again to 37%. So Tesla can move very violently, and it can find itself selling off severely depending on the macro news. If you want to kind of have an idea of what our drawdown currently is, It is currently a drawdown of about 11.5%. We saw as low as 14.99%, 15% when it kind of dipped on the open. 2 days ago, yesterday? It was a pretty terrible move so far for an earnings report that was relatively good. Tesla is the market or sector leader, and you have these really, really humongous OEM manufacturing names like the VWs of the world who are not able to compete in this EV market at all. And the jurisdiction that these people are in, be it selling in California or being based over in Europe, there are requirements that a lot of the offerings that they have have to be electric vehicles. I'm sorry. And so they're finding themselves in a precarious situation where they just don't know what to do because they're not making any money off them. They're asking themselves, why do we want to make EVs when people are still buying our ICE cars or internal combustion engine cars many hundreds of percents more than the EV cars, and we're profitable on them. We know how to make them. We don't have any supply chain problems with batteries for ICE vehicles, obviously. And there's so many issues with the electric cars because they're so software oriented when it comes to operating systems, when it comes to driver assisted systems for be it autonomy or FSD in our case. So it's kind of weird how Tesla gets penalized, and little moves like Volkswagen investing in the Xpeng company. So Volkswagen invested a couple $100 million into Xpeng, and they are having that Chinese startup company manufacture cars that will be branded as Volkswagen cars and being sold in China, because Volkswagen, as you probably remember from that all hands meeting with all their 2,000 managers, they're experiencing market share loss in almost every market they're in. So it's kind of disappointing to see the lack of enthusiasm with people outside of the retail fan community. There's not much institutional investing. There's not much big money investor investing. It's really just regular people like you and me who are keeping this thing at where it's at now, which is very surprising. But until tomorrow, guys, thank you so much for listening. That's all, and hopefully we'll see green tomorrow and through the rest of the week. Have a great night. Bye.